It's interesting because we have all these headlines about the complications with this ByteDance deal, this WeChat ban, and yet we continue to see Asia tech actually outperforming quite well in the last couple of weeks or so. How do you begin to model these types of bans and disruptions right now, and does it change the dynamics of this rally we've seen in tech?
Well, thank you, Yvonne, thank you for having me on the show. A couple of things to note, that Asian tech never went up as much as some of the FANG stocks did on the US. So that's one to note. So when you have seen the sharp correction in the last, let's say, week or 8 days on the NASDAQ, led by these large cap or mega cap tech stocks, Asia has held up relatively well. Second, when we follow the flows of foreign investors into markets, interestingly, like Korea and Taiwan do have official data of foreign flows. Foreigners actually have been net sellers of large cap tech across both Taiwan and Korea tech, where we can get data. We don't have data. Of course, you don't have that data for ADRs and Hong Kong, but based on our checks and my discussions with the leading technology funds, you haven't seen that amount of massive inflows. So some of the rally that you've seen here is not necessarily driven by those foreign institutional investors, but has been probably led by domestic. Second area is across Asia Tech, when you see, and we are hosting our 21st Asian Technology Conference this week, tech earnings are holding up very well. If anything, I think third quarter will again end up being, in aggregate, in my best guess, will end up being a beat rather than a miss. And there are several factors towards that, and we can discuss that later in the show. But that is also helping.
Yeah.
So overall, sorry, go ahead.
I was going to talk a little bit more about the valuation side of things, because we have seen a run-up in some of these 12-month forward PE for Asia ex-Japan tech versus just Asia ex-Japan at the moment. Given this whole theme of decoupling now and the whole nationalism theme, do you see that these valuations have more room to compress, or do you think that they could actually widen from here?
It's an interesting question, but I think the answer will depend on which part of tech you end up looking. So when you look at Samsung Electronics and TSMCs of the world, just to take the two mega caps outside of China, they do supply their link not just to the China theme or the US theme, they do supply or they are manufacturer for everyone else in the world. So they are more macro. When you look at specifically on China names, some of it may be impacted, but the big cap, the mega cap names like the Babas and Tencents of the world very largely depend on domestic China. So there's a sentiment element to it, but the earnings element still remains very, very robust. And when you look 3 years out, outside of a very extreme scenario where you have complete, let's say, Chinese walls coming up between US or the Iron Curtain coming up around China, we see the earnings for most of these large caps are going to hold up very well. On valuations, Asian tech valuations have risen, but when you compare them vis-a-vis US, aggregate valuations haven't risen at all over the last year or so. So the way I would say is valuations are rich, absolutely. There is no doubt about it. We can't call them cheap, but they're not in that irrational zone which you find with some of the large cap and mega cap names in the US.
And when it comes to earnings revisions, you mentioned among Asia tech, that's actually turned positive now. Which segments are you seeing the most earnings upgrades? Do I stick to the chips, software, hardware? Where do you go?
It depends more on the end market. So one area where you have seen consistent earnings upgrade and largely led by demand. So two things are driving earnings upgrades, demand and inventory. Demand side obviously is a little bit more sticky. So work from home and study from home, importantly, has been very, very strong. We expected second quarter, all of us, I mean, obviously I'm having this interview from home. A lot of the world is working from home, but importantly, the study from home did not have a home infrastructure at all. So that started getting created in second quarter globally. You ran into significant issues because of the lockdowns. People were not able to buy as much, and there were component shortages from the supply side. And therefore, third quarter was strong, and we were expecting that to start fading by the middle of third quarter. What we are seeing now is that the strength is lasting at least into October, if not beyond. Entertainment from home also has been very solid. So you have seen a significant pickup in TVs on the hardware side and gaming on the software side. So the answer to your question would be it runs across industries, but depends on which end market you serve. So 5G in China,
Manish,
anything related to work and entertainment from home is very strong.
You mentioned a little bit about where to go in this Asia tech rally now. Talk us a little bit more about 5G and cloud. Obviously, with the work from home, this is where things are going. But we also see when it comes to the Huawei troubles with securing 5G contracts as well. How does that play into other Asia rivals out there? What opportunities does that open up?
Yeah, great question. So 5G in China has ramped up far faster than anybody expected. We have been bullish. I think most of the street has been bullish on 5G. But the second quarter, coming out from the lockdowns in March in China, has been phenomenal. So if you look at July and August, almost 60% of the sales of new smartphones in China are already 5G. We were expecting that 60% mark to be hit sometime early next year, right? So on the flip side, the rest of the world, which has been in lockdown in 2Q and extended into 3Q, 5G has got pushed out, rollout, which is understandable. But we expect a similar scenario panning out as and when the rest of the world starts to normalize. So 5G is clearly kicking very strongly. Cloud data center, we have already discussed all about it, that there's been a significant pull-in the move to the cloud, and that is going to a large part going to stick beyond some cyclical downticks in fourth quarter because of very sharp early pull-in. Semis are the area, and you were asking me just before your breaking news. Semis are the key area where we will focus on because that's what captures most of the high-end value, both from 5G as well as from the cloud data center. And from Asian perspective, that's where the large market cap stocks are. So when you are looking at an index level, obviously that's where will be the biggest impact. So semis are the place to be. Within that, if I may, memory is one of the better areas to be, largely because when we started with this valuation argument, semis valuations have risen, but memory valuations are very much in the lower half of their trading range. So that would be one of the stronger bets. Next year, almost certainly, is a memory shortage year after some oversupply that you're going to see in second half of this year.